All right, we're going to take a look at how you can model tax increment financing in Impact Dashboard. So if I jump over to a model that I've created here, we've got everything plugged in except for this last piece of accounting for the tax increment financing. And so in our case, I have some information. I know that this TIF exists and this project is going to be located in the TIF. And when you're in this particular TIF, there's certain rules, so to speak, around where the property tax revenue will go. So for the city and the county, they're going to contribute 40% of their real property taxes to the TIF. And so we want to model that in this analysis. So again, I haven't done that yet, but we can kind of look at the results before we do that. I'm looking at here just at a community report where I've configured it to include just the city and the county because those are the two entities that will be participating in the TIF. And tax increment financing is kind of different across the country. So you might, in your area, you might have a TIF where basically it applies to every single one of the jurisdictions. Everybody contributes to the TIF. But in Texas, the way that this one's set up for kind of just being realistic, we've got two entities that are going to contribute to the TIF. They're going to contribute 40% of the real property, the incremental taxes on the real property. So here, before I get to that part, we're just looking at what's this project doing if, let's say, that it wasn't in a TIF. And in total, it's getting about $750,000 of real property for those two entities, so split up between the two, but 750 in total. So to apply this TIF, I'm going to click in this upper right-hand corner, this settings area. If I click on the settings, the little gear icon, it'll take me to this area where we can find the TIF district. So over here on this left-hand side, we click on TIF district. And I've already been kind of messing around with this scenario a little bit, but if you would normally click on this, you would see the first time you click on that, it might ask you which TIF districts do you want to include. It would look something like this. If you have some TIF districts, you can select which profile to apply to this scenario. But I've already done that. I've chosen TIF number 2, and that pops right in here, and that's already telling us exactly what I've already described, that the city and the county are going to contribute 40% of the building taxes to the TIF district. Okay? And we're not going to, none of the other districts are participating at any level. We're not doing anything with sales taxes, but again, these are options that you could configure. And again, these TIF districts can be configured in your kind of My Account settings and then applied to any project, any scenario that you would like. So in this case, we've got our TIF kind of fired up, checked positive there. And we go to our report, and we're going to see everything has already kind of been updated for us. So on this, this is the best place to see it, I think, in my mind. The community report, we've got the city, the county, and now we've got the TIF district. So I've got, if we look up here, we've got the city, the county, and the TIF pulled in. We've got this column for the TIF, and then we've got our total. And so we can see our real property taxes for the city now have an asterisk, and actually the county has an asterisk as well. If we look down here, we can see that's just identifying the amount of the TIF contribution. So this is the 40% of that building property, and for the city that was about $218,000. For the county, that's about $82,000. And so in total, the TIF is getting $300,000 from those two entities in the form of those contributions. So you see that this total down here, the amount of the TIF contributions is equal to exactly what the TIF is receiving, so that makes sense. And we can see in this total column, it still is a total of $751,000 in real property taxes. It just happens to be the case that that is not split out across two districts. It's now split across the three, which includes that TIF entity. So one of the things we can do on our detailed report, we can see this kind of adds a new entity. If we jump to our fiscal impact overview, we've got the city, the county, school district, county hospital, the college, and so forth. And now we have the TIF district, and that's getting that $300,000. So our net benefits for the city and the county will have been kind of adjusted, so to speak, to kind of contribute that revenue down to the TIF entity. So as we think of this, really nothing has, there wasn't new money created necessarily from this TIF. It was just kind of coming out of the bucket that was going to the city or the bucket that was going to the county, and it's been diverted to the TIF in this case. So our total, if we think about this, before we put the TIF on, this total was still the same. Before we had the TIF, it was just kind of going to those two entities. Now it is included in the TIF. So one way to see that, let me just kind of back out. So we've got 2,035,694. That's in total when we have the TIF. If I kind of just quickly remove that TIF district, we'll see that that total value stays exactly the same. Now you just have a little bit higher amount, the original amount, going to the city and the county. So that's how you would apply the TIF, and then that's really kind of how it comes together in the reporting. You can see it there. We also, if you need to see more detail about it, the appendix will include the year-by-year values, so the amount of the property taxes contributed to the TIF by the city in this case and by the county in this case. And in total, we can keep scrolling here. We get the table that shows us all of the taxes contributed to the TIF. In this case, again, 300,000 over 10 years, and that's kind of the flow year by year. So there it is.